Yes, sir.
Okay, thanks, welcome. Okay, Mr. Rishabh, let's start. Huh?
Yeah, yeah, I think we'll start. So just give me a minute. Screen. Okay.
Yes, we can see your screen.
I hope my trading news window is visible, right?
Yes.
Okay. So I'll first come to the ideation phase, right? So what is my idea? Like, why do I want to trade this strategy? So my observation, so I start with the observation. So my observation is that, I feel, again, I'm using the word feel. So I feel that, markets after expiry. So let's say the expiry is on Tuesday. So on Wednesday, the market start at a particular point. Markets move a lot up or down, as may be the case. But then again on the next week expiry, the market more or less is at the same level. So that is my hypothesis with which I'm starting. So I'm trying to say that, on most weeks, may not be in all weeks, but on most weeks, market tends to, start at a particular point, will move in either direction, and then again try to, end at the same level. So that is my idea, and I want to see that, okay, how do I use this idea? So before I go and do anything in algo test, let us just look at, is that, I mean, does that have any credibility, the idea, right? So we are now on 14th, right? So this week is not yet done. So let's go to 3rd of December. Okay. 3rd of December was the first day after the 2nd December expiry. So I go to 3rd of December. This is the first candle, which starts at 9:15. So the market started at, 26,000 something, 2635, went down and all. Okay. Okay. Again, the second point that, I want to also here see is that, initially, so I am ignoring the first few candles here because I feel that, the initial period is very volatile, right? So, there might be a big gap down, there might be a big gap up, the market will try to recover. So in this ideation, the second thing that I'm looking at is that, let me look at the market, maybe after 9:45, right? So I'm just taking, for example, here, I'll start with a 10 a.m. setup, right? So I'm saying that, okay, at 10 a.m., the market is at 25,950, right? So let me just mark this level at 25,951, right? So this is on 3rd December, 10 a.m. Market is at 25,951. Now, if I look at the expiry, so the expiry was on 9th December, right? So now let's go ahead. So let's see what happened. So 9th December, the market went down a little bit, 60, 70 points, then recovered, then went up to almost 26,000, then again came down. Now we are on the 4th, right? Then on the 5th, again, there was a big move, went up to 26,200, then again came down on the 8th. 8th is the Monday, right? So one day before expiry, again came down. And then again on 8th, it was very volatile, so fell down by 100 odd points. Then again came up. And then 9th, again, it opened below. There's a gap down. And then again, if I look at 9th, 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 9th. Yes. Okay, the other thing that I want to see is, and I think that's what we saw, right? There is a gamma blast which happens in the last 1 hour of the expiry. So I want to avoid that because let's say wherever my strategy is, I don't want, any like, move which happens, which would, like all the efforts or all the profit which my strategy has earned for probably, the last 4 days get wiped off in last one day, right? So I will, my thinking is that I should end my strategy at 230, right? So at 230, the market was, let's say, at 825, right? So in this, we saw that, okay, there is a 100 odd points move which happened, right? So this is one instance, that 1 week that we saw. Now let's see one more week. So I go to 26th November, right? Again, so 26th November, the opening was a gap up opening. So I let the market settle. Yeah, I look at 10 a.m. again. So let's look at 10 a.m. This is my 10 a.m. candle over here. So this is at 2676. Now, when was the expiry for this one? Is on 2nd of December, right? So let's go till 2nd of December. So what happens till 2nd of December? Yes, the market goes up almost to 26,300, and then the market corrects a little bit, again tries to go up, again there is some correction, again a gap up, again, correction, and then there is a big correction, it falls down, and then goes below the level that we had marked on 26 December. And if we see at 230, yes, 230, it is at 2641. So which was 2641, which is about 30 points away, right? So let's see one more last week we can see, and then we can go to algo test, right? So I go 1 week prior, which was on 19th November. 19th November, again, there is a lot of volatility in the first few minutes. Then I see at 10 o'clock. This is the 10 o'clock candle at 25,918. Okay, again, the market traveled a lot, went up to 25,246, again started correcting, and then again went up, again few corrections. Sorry, when was the expiry? The expiry was on 25th. So, 24th, there's a correction, and then we go on the expiry day 25th. 25th at 230. So this is the 230 cap. So again, it is at 25,950. So again, 20, 30 points. Yeah, so hope the concept is clear, right? Now that I want to make a strategy in such a way that, the decay which is happening, the four, whatever the premiums, there will be some premium which I will get at the start of the trading week, which is on Wednesday. My strategy should be such that, it's able to kind of withstand the moves. And then when the level comes more or less at the same level, I should get that entire premium, which was there on the day one. Because eventually, if it is, at 20, 30 points, then probably the most of the premiums which would be there on day one would have decayed, right? So that is the basic premise of my strategy. Any questions on the ideation phase?
Just one. How long have you been, like tracking this data in that sense?
So I have
Whether this is relatively
uh,
new or like idea or
mm,
like it's.
so I have been trading with this strategy, live trading with the strategy, since I would say almost a year now.
Okay, got it.
Yeah. So again, the what we will discuss today, I don't like to share, ready-made strategies. So what I will discuss is, the ideation and how I went about building the strategy.
Sure.
And then what I want from you guys is, to improve the strategy and see what all different things can be done, and what suits your style. Like, if you are somebody who's very risk averse, then there might be a different version of this strategy. If you are somebody who likes to take more risk, then again there might be a different version, right? So what I'm sharing today is not a live strategy. Like, the concept is live. So I am trading, as I said, I'm trading this strategy, but this exact strategy is not, what I am trading with. So I want you guys to work on that strategy and come up with the improvements of what we will see today, right? So I'm going to the setup now. So what I'm saying is, okay, I start at uh, 10 o'clock, right? So it's a positional strategy. So I start at 10 o'clock, 4 trading days before expiry. My algo test screen is visible, right?
Yes, it is visible.
Yes,
Yeah.
sir.
Yes.
Visible.
Yeah.
You can.
So I start at the positional strategy on Nifty, right? So positional weekly expiry, 4 trading days. I start at 10 and I want to exit at 14:30 on the expiry day, right? Now what I will do. So uh, I like to start. I mean, I would like to take the premium. So I again observed that, typically the at the money call is somewhere between 150 to 160 rupees on a, DT4 basis, right? So I say that whatever is the closest premium of 150 rupees, I will sell that call, and I will also sell a put of 150 rupees, right? So this is the basic framework. Now, to manage the stop loss, um, now we saw there were a lot of movements which happened, right? So I want my strategy to be largely non-directional. So I would give, a generous stop loss of, let's say, 65%, so that even if, there are small moves or relatively, medium moves that I call, like maybe like a 50, 100 points on the Nifty, my strategy is able to withstand those moves. And if if in a week the Nifty, catches one direction, so there will be weeks, right, where it just goes in one direction, then probably I get stop lost in one of the trades. But then that is the other trade will expire worthless, right? So then at least I will get, so if I lose, let's say, 65% of 150 here, I get the entire 150 here, so that my strategy is still ending in a profit, right? So that's again my basic premise, right? So let us keep it very simple right now. Let's just save this strategy. Okay. So let's do the back test. Let's see what happens. Any guesses? What do you think? Whether this strategy would work, or whether it will be profitable or not? Let's just take that. What do you think?
See,
Going to
Mavakar just
say,
said, if you go to TradingView and check the weekly movement in the weekly chart, you
Yeah.
will get highest and highest and minus lowest in one candle, weekly candle.
Mm-hmm.
Then we can find the range, approximate average range.
Right.
Okay. So based on that range, we can set the movements, right? Either
Yeah,
upside or downside.
that's a great idea, and I think that is something which I would like you guys to try it out. And again, there is a concept behind it which is called the average to range, right? ATR. So if you look at Nifty's, as you said, the weekly range, and you find out, what's the ATR for the Nifty, maybe use that data and see how do you design this strategy better, right?
Mhm.
So right now, I'm just keeping it very simple, right? As somebody who would have just had that idea, and what would be the first iteration that that person would do, right? So I'll keep this, which is our 2 rupees per lot, which is the brokerage for our group. I add the taxes and slippages, and I do a 0.5%, right? So let's look at the strategy now. So 2019, okay, profitable. 2020 was not so good. 2021, profitable. 22, profitable. 23 again. 23 again, the VIX was very low, so again, not good. 24 was decent. 25, again, decent, right? So this is how the strategy is performing. This is the curve. And if I look at the overall profit, a 55,000 profit with a 70%, which is a good win rate, according to me, in a selling strategy. But where the strategy is kind of not working is if you see the average profit, you get only 4,200, but when you lose, you are losing almost 9,200, right? So that is kind of like, even with a good win ratio, your overall profit is not that great. And then again, if you see the drawdown, even the duration is very high and the amount is very high, right? So this is, the overall parameters, right? So then I'm thinking, yeah, okay, this will not work in the way it is, right? So let me see what changes I can do.
Can we
Okay, so the
trail SL to break even for the other leg? Like, I mean, there may be an instance where both the sides hit because of a lot of volatility.
Mhm.
So at least in that will protect one side. If it's going the other way, at least it won't lose both ends. I don't know. Maybe
Right, right. Yeah, I
it'll help
mean,
me in one
again,
of my strangle strategies for sure. So
true. No, these are all, good suggestions. And again, things that, I would maybe some of these we can also look at,
Can we have a
during the session.
trailing stop loss?
Yeah. So let me make one change first, and then, I would take on your ideas on, how to, like, what do you think, what else we can, look at, right? So my uh, ideation still remains that, it has to be non-directional. But
Hmm.
what I am thinking is that instead of giving it like a 65% stop loss, because then, a 65% stop loss becomes very high.
Hmm.
And what happens is that the market will go up, hit the stop loss, and then again come down. And when it's coming down, I am already out of my call leg. And my put leg will also stop. I mean, I will start, making, which was in a profit, my profit will start going down. And then, if it again, goes down below the, 10 a.m. level on day 4, which was there, then again, this will end up in a loss, right? So to manage that part, what I am thinking of is I change the stop loss to 33%. So I give a small stop loss so that, if it catches one direction, I get out very quickly. But I add a recost element, right? So what does recost means? Recost basically means that, once, let's say I started at 150, my stop loss got hit at 33%. So 33% of 150 is how much? Let's say around 50 rupees, right? So it reached at 200. My stop loss got hit. I am out of this call. Uh, then the market started going down, right? So market started going down. The profit that I was making over here, I kind of, started, my profit started reducing. When this call, which the original call, which I had shorted at 150,
Rahul,
when
coordination
the, sorry, yeah, so when that comes back to 150, I make the entry again. So again, my view is intact that, these will expire worthless, right? And I will be in the game, right? So my call leg, which got exited, uh, I'm giving only 33%, and then I'm again entering into one at that same call when the price becomes 150, right? So that's the strategy, that's the setup I'm working with, and I'm saying that if this happens two times, like first time my call got stop loss, again it came down, again it entered, again it went up, and again there was a stop loss hit. So I lost 33% in the first instance. Again, in the second instance I lost 66%. But again, if suppose the market goes down and it corrects, then it reaches 150, then I take the entry again. So I'm allowing for two re-entries over here. And the same thing, I'm also doing it on the put side. Right? So that's the only change that I want to do right now. And I start my back test.
One question here.
Yeah.
Can I? Yeah, see
Yeah,
this
sure.
recost you are giving, okay, but the closest premium, the premium will be getting reduced, right? Even though the premiums will be getting reduced, right?
Yeah. So what
Or
happens
or it
is,
can so happen that the closest premium is 150 means it can be in the money strike also. So if it is in the money strike, then we will not get profit rate selling side.
yeah. So the way it will work is, Marker, that I entered at 150, right, on Wednesday at 10 a.m. Let's say on Thursday at 10 a.m. my call got exited, right? So when will the call get exited? My call will get exited when this call premium had reached 200,
Yeah.
right? So at that time, when SL is hit, this strategy will look for the call, the same call, right? And it will say that, once it reaches, so let's say if on the Wednesday, the 26,000 call was at 150, the 26,000 call, and it went to 200. Now it will say that that same strike price, the 26,000 call, when it reaches 150, I will enter again. So when it reaches 150, it may again be, as you said, it may be in the money, or it may be, slightly, I would say at ATM or ITM one kind of level. But my theory is that, this, it will go down, right? So that's where I'm selling the call, right? So it will end,
That
my
means
Nifty will end at or near 26,000 only. So this, even if I sell at 150, and if it is at ITM on Thursday, probably by Tuesday it will become worthless. So that's the theory.
no,
Yeah.
means recost means it will check for the same strike price for which it has entered earlier or in the
Yeah, I
beginning.
think recost will work on
Yes.
the same strike. Re-ASAP
Yes.
would work on like a closest premium 150. So I think
Correct.
that's the difference.
Okay, same.
Yes.
Okay,
Yes.
okay, got it, got it. If it is same, then it can. Yeah.
So it is same. And if you remember, we had like 55,000 profit and 1 lakh drawdown, right? And almost, I think, 300 odd days of drawdown period. Now, let's see. So 2019 again was okay. 2020, in the last strategy, if you remember, 2020, we were in loss. This time it's in profit. 2021 is better. 2023 also we were in loss last time. We are in profit. And 24, 25 is again okay. If I look at the curve looks much better versus the previous instance. Overall profit, wow, it's jumped up to almost 3,97,000 from 55,000. My win rate has gone down from 70 to 57, but my winning to loss ratio has improved very nicely, right? So this is again a good thing for me. My drawdown has gone down considerably, so I'm losing only 47,000 is the maximum drawdown that I've seen. The period has also gone down considerably, right? 98 days. 1.25 is my RMDD. My reward to risk ratio is pretty good, 1.37, and expectancy is also decent at 0.35, right? So
Yeah.
does this strategy look good now?
Yeah, better. Can you
Yes, much
calculate
better.
the margin?
Yeah. So that's the next point that I was coming to, right? So now what I'm seeing is, yeah, let's look at the margin, right? So the margin is at 3,50,000 because we are exiting the strategy on expiry, right? So when we start, the margin requirement will be lower, but when we go on expiry day, this margin will increase, right? So I'm calculating it on the entire, what margin will be required on expiry day, right? So overall, in last 6, 7 years, this has given about 113%. Average return is anywhere between like 5 is the lowest, 15, 20, 25, 28. Like, so some years it's given decent returns, right? So this is again, as I said, this is just a framework. This is not a live strategy that is, being run. One last change that I want to do in this is basically, yes. So I look at my P&L, right? So I am looking at now the biggest problem with the positional strategies is that you are worried about what happens. What if there is a big gap up or there's a big gap down, right? You are selling naked calls, naked puts, right? So what happens in those instances, right? So you are worried about that, right? Even though here, if you see, the maximum drawdown is 47,000, but that fear is always there, right? That what happens if there's suddenly a black swan kind of an event, and it has an entire risk to your entire trading capital. So there are again different ways of looking at it, but I'll keep it simple over here. Is I will add a basic hedge, right? So that in case anything happens, like there's a good news and market suddenly is opening up 400, 500 points up, then I should be able to get out of this strategy, or I should be able to protect the strategy. If not, if there is again a bad news, suddenly Trump does something, or there is some other development, war type situation, and the market reacts, then I should be able to protect the put side, right? So okay, so what I do is I will enter into a call and I'll take a very, very basic hedge, which is a 5 rupee premium. And I again take a put, which is at a 5 rupees premium, right? Let's just make that change and look at the back test. So because we have added, a buying leg, or let's say a hedge over here, the strategy is likely, the performance is likely to go down, because this will most likely, this is, the 5 plus 5, so 10 points you are giving every week to the market. Most weeks you will not be able to get anything on these hedges, right? So um yeah, I think as we expected, there was like 3,97,000 became 3,45,000. My 50,000 is the drawdown. And because, of course, you're adding a buying leg or a hedge, your drawdown is increasing. But the number is not increasing that much, right? But the interesting thing which has happened is my margin requirement has gone down, right? So 2,04,000. So which I was like almost, I think 3,80,000 was my earlier requirement. That has gone down to 2,04,000. So with the hedge, then I'm thinking that instead of doing one lots, I can do two lots, right, with the same capital. So hedge has given me that, with the same fund which I was earlier thinking, which was like a 3 lakh, I think 3,70,000 or 3,80,000. If I do two lots, um, my margin would almost be the same, maybe like 15, 20,000 higher. But instead of running one lot, I can run two lots of this strategy, right? And I am also protecting myself from any event which will happen. So, I can have a peaceful sleep. I don't need to look at, what is happening in the US market, what is happening to gift nifty, and, all those things, right? That is also very important once you, start trading, right? So if you see, the margin has gone up maybe 25, 30,000. But with that increase in 25, 30,000, I am able to now get almost 6,91,000, right? My overall RMDD, again, these numbers will slightly go down because of the buying leg. But if I look at the overall returns, I think I would be like, pretty much satisfied, as, this is like one of the strategies that I would look at in overall portfolio, right? So yeah, I think that's about it from my side in terms of, the setup. Now I can give you some hints, or like, let's say, tips, or, of how you can look at. So one thing can be is you can play around with the uh, like the strike price, right? So what is the right strike price? Whether you should look at ATM, whether you should look at, ITM in closest premium. Is there some other number you should look at? So I think again, you should observe and think of, what changes, how to optimize this part. The other part is, of course, the stop loss and the re-entry. So how you can, look at optimizing this, and, what is the best combination that you can use. And the third part that you can look at is that, let's say you started uh, with a call, with a call and a put, right? And the market is only moving in one direction, right? So um, let's say the market is only going up. So your call got stop lossed once, and it did not re-enter because, the market never came down. So you have given 33% over there. The market is still going up. Now your put, let's say it's just Friday. Okay, so it's day 3, and your put is already, it was started at 150, but because the market is moving in only one direction, the put has now, let's say, gone down to 20 rupees or 25 rupees. So the question is, you almost, you gave 50 rupees here in the call, right? Here the put is almost at 20 rupees. So 130 you have earned over here. So you are net 80 points in profit, right? On day three. So does it make sense to book that profit, right? And make a re-entry. Now that target, it can be like, you are booking that profit, let's say at 80% and making another entry. If you are confident that, the market will only move in one direction, so you again make an entry at 150 so that you've already eaten the premium of one put and you are hoping to eat the premium of another put as well. So if you have sold 150, you booked it at 20 rupees. You are again selling on Friday another 150 rupees. And then you are hoping that may not be the entire 150, but maybe let's say 70 points, 80 points again you are eating in that premium. That can be one approach. Or the approach can be that you go for a lower target profit and then have some of these things, maybe a lazy leg, maybe, something on momentum where you say that, only if after hitting my target, if the call again comes to a certain level, I enter. Right. So those are the variations that I want you guys to try. But yeah, that's it from me on this strategy. I would now want to hear from you guys if you have any suggestions or if you want me to try anything, maybe one or two things I can try over here right now in the class.
So overall profit exit option is there.
Yes, that option is also there. You can do overall
Means like
target.
when we exit from one leg, we want to exit if the overall profit is met.
Yeah, so overall profit will be for the entire strategy. So like your entire strategy, if you say that once it reaches, let's say 10,000 rupees, I exit the strategy and then the strategy will stop.
All legs will get
All legs will
executed.
get executed. The other way you can say is that you do a re-entry on target, right? So again, if my 10,000 is hit, you exit it and then this entire strategy, I rerun it based on the conditions when the exit has happened. So it will look for a new strike price at 150, call, put, all of these things. It will again look at all the new things and again make the same, like replica of the original strategy. Again, it will enter. The other way is also, which is called this, right? Lock and trail. So if you say that if my profit reaches, let's say 10,000 rupees, lock my profit at 5,000 and then, trail it. Like for every increase in 500 rupees, increase my profit by 500 rupees. Trail my profit by 500. So again, it will lock your profit whenever it reaches 10,000. You are assured that, now you will definitely get 5,000 from this profit. But the upward potential then, is there. So that, let's say if this 10,000 becomes 20,000, you are riding that out. But if, let's say, the 10,000 then goes down to 5,000, you exit at 5,000. So these are the, again, things that you can play with.
Okay. Can you share this strategy file so that we will modify and test different scenarios?
Yes, I think
We
we
will
share it
upload
on
and then modify
the,
and then test different scenarios.
yeah, so
We
I think
can
we share it
document
on
it.
the handhold group. There is a special handholding group which is there. So yeah, I think I'll take that opportunity. It's something which we had discussed last time also, right? So I'll make it very brief. So on this hand-holding group, what you get is this is a special focus group. So you get hand-holding from all the mentors. So there are four of us, right? So Sachin, Anurag, Achal, and myself, right? So we are there on that group to answer your questions. We are planning to conduct live sessions, so we've not yet started any live sessions yet, but there will be some live sessions that we'll do during trading hours. Then this is the one-on-one support that you get, in developing and fine-tuning. So if you come with any idea or the strategy that we are sharing, if you would want us to look at that strategy and suggest, then that support is there. And then there is a lot of things that we will do on the mindset development, right? And there is a bonus. Bonus is basically that there are few individuals, like after the period of 13 months, these individuals will be added to a senior trader group, again where the we meet once a week, and we discuss only strategies and how we can improve the strategies, right? So as Sachin also said at the start of the session, right, trading sometimes become very lonely, right? So this kind of helps us to brainstorm our ideas, look at different perspectives. Because what happens is, once you start trading, your mindset becomes rooted again based on your experience. You start thinking in one way. So whenever you are developing a new strategy, you kind of that bias is always there of your thinking, uh, which may
Yeah.
be good, which may be bad. Again, I'm not debating that. But then, when you share that strategy with someone, you may get a completely different point of view which you had missed. So that is what we try to do in this senior trader group. Uh, what we want from you, I think, is very like basic, right? Like you want to learn, observe. You should be dedicated, disciplined. And then, of course, there are a few things which we are doing for the community. So where we would want you to, open this account on Algo Test and start again. See, this idea is that if you want to learn, if you want to do things, you have to do your research. You have to, whatever strategies or whatever ideas we are sharing, you have to do your own testing, right? So that's where we've recommended this. And then of course when you go live, you have to like this IFL account will help you in uh, like we've negotiated very very low brokerages over here, right? So again, the idea is that as traders, sometimes we don't realize that our transaction costs can be very high. So here at least the brokerage element we've tried to control, right? So that's something which we want you to benefit, right? So that's the idea of the special focused group. I'm just stopping my sharing right now.
Yeah, Rishabh, one thing, I think the second point, can you just open that? The second point, no, live
Yeah.
trading, training in live
Yeah.
trading, live session during trading hours. I think it is prohibited now. I don't
Yeah.
know.
So it's not again. So as I said, even in these sessions, we are not doing any strategy sharing, right? What we are doing is, we are giving you a template. We are telling you how our mindset has developed or how we've looked at strategies. So even during trading hours, it's not that we are going to tell you that, take this trade or, take this, execute this strategy. What we want to do in this live session is we will help you to see at data. I will help you to see at market, like, okay, this is what the market is doing. This is our observation, or this is what, we feel, may happen, right? So it's about, like, because these kind of things, like, what the market is doing, I can only share with you, when the market is live. Like afterwards, you may say that, oh, now you have the benefit of retrospect, right? That's why you are saying that, this is what had happened. But when I am sharing those ideas, or what I am observing, or what kind of data I am looking at, those things I can share only during live sessions. So the idea is, again, it will be
Yeah.
more of like observations. It will be more of, ideation part, not so much on, that take this trade, or, execute this strategy.
Okay. Yeah, got it. It is since it is a, if it is that is the reason we have to abide by the rules. Like we are not sharing these videos to open community, open people.
Correct. Correct. Correct.
Okay, good. This is very good. So you can share that algo, this strategy file. We will upload and fine tune and test it. That is okay, right?
Yeah.
In the
We
group.
can do that. I think, again, see, the the ideation was very basic, and I just created the strategy. Also, I created in front of you. It was not something which I had ready made was there, and I just run the back test, right? So the
Yeah.
idea to do what it was also that you understand, like, how my thinking had evolved when I started this strategy 1 year ago, and then I made few changes. Then
Mm.
I ran it in forward test, and then finally, when I was convinced that yes, this is something which is good, I put it in my portfolio, looked at it, from a portfolio perspective. Now, the other thing that I was, talking, like, I looked at it from a DTE4. You can also look at it like, does it work on DT3, DT2, whether DT3
Mhm.
works better than DT4, or DT2 works better than DT4. All those are some things that you can observe. You
Yeah,
can back
earlier,
test.
no, the
Yeah.
expiry was on Thursday, so entering on Friday was very good. Why? Because Saturday, Sunday were coming in early, right? So Monday, if it's going to open, not with high, what you call gap up or gap down, you would have made the good money on Monday itself, Monday by 2, 3 o'clock earlier.
Again, hypothesis, right? I am running it even after the expiry change. Okay,
Acha.
so uh, it has been a mixed bag, but yeah, I mean, this is something which, yeah, you would have to test and validate it for yourself, right? Whether,
Mhm.
because of the expiry change, has there been any, change in the strategy performance? And
Yeah.
then if you conclude that yes, there is a change, then maybe design the strategy for Sensex, right? Because Sensex is now on Thursday expiry. So if
Yes,
you
yes.
feel that, this strategy is something which will work, with an entry on Friday, and then, you write the entire week, then try to see if this is kind of strategy works on Sensex.
Yeah, for Nifty, even entering on Friday, I mean DT2, I think, right? DT2. It's also good actually. Friday afternoon, 12 o'clock and all. Yeah, we'll check
Yeah,
combination.
so that's the idea, Orkar, that you do your research. And again,
Okay.
I think it will help all of us because, as I
Yes.
said, right, I have a certain way of looking at it. I'm running this for some time, so there might be some biases that I have formed. But yeah, I think a fresh perspective, something different, is always welcome. And if it works,
Okay.
then it works for all of us, right? Then all of
All
us
of
can
us.
move to a better strategy.
Yes, definitely. Thanks. Thanks, Rishabh.
Great. Any other comments, Ashish, Suchi, anything from your side?
So it was a
ಈ
great
strategy
session.
ಗೊತ್ತಾ ನಿಮ್ಗೆ? I have a few ideas I would like to try on this particular strategy. So once I do that, let me come back to you a little during the week or something.
Sure, sure. I'll just say that when I, started the ideation, I would have done at least like 100 plus. I don't know, I mean, how many, but yeah, at least 100 plus backtests and combinations, and different
I'm sure, yeah.
settings to come up. I mean, even the setup that I showed you, like, was, I achieved after like 20-25 back tests, right? So, yeah. So yeah, I mean, there are a lot of variations, a lot of things that you can think of. So yeah, please try it out and share it with us.
Sure, sir.
Okay.
Yeah.
Okay.
Yeah, Suchi,
Yeah,
you were
thank you
saying
so
something.
much for
I
this.
was
Yes.
just saying that the strategy was very good. But if some doubts are there, then how can we connect to you on the same group, like just texting you or live we can connect like.
Yeah, I mean, so there is, as I said, there's a hand-holding batch which is there, right? So there, I think, we are discussing more things. But even on the cohort group, I think if you message something, then one of us can look at it and we can give our inputs.
Okay. So I won't be able to join the through the URL you have given. I won't be able to join Algo test, but if it's possible, I'll be able to join IIFL that account. Sorry, the DMAT account. I'll be able to join. Then can you just shift me to that special hand-holding group?
Yeah, so you can text Sachin, and
Okay.
he'll explain to you. So there's a form and everything that you need to fill. So just
Okay.
get in touch with him and he'll explain it to you.
Okay. Okay, sir. Thank you.
So one question I have, Rishabh and Sachin also, I opened the Algo test account through the link, the referral link, right? So in that one, I am getting back test result only for last 12 months, whereas you are getting for 5 years. So how can I increase that to 5 years? Or is there any other subscription I have to take?
It should not be the case. I think it's simple. I think you should. I mean, the date is what you have to choose, right? So,
No, even though I choose 5 years, but backtest it is by default taking only one. I can show you if you are okay. If you can
yeah, sure.
turn off the recording, then I will show.
Yeah.